with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
Inline CPI sends futures flying with 30 minutes to go until the official start of trading. I'm Katie Greifeld.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
And coming up, no surprises here. Consumer prices rise in line with most forecasts. 90 more days. President Trump extends a trade truce with China into early November, but Beijing's new guidance on NVIDIA chips may stir up tension once again, Danny.
And we're so relieved that CPI came in line that even with that story, Katie, NVIDIA is heading higher this morning. Some stocks to watch. China is telling companies, as you said, to avoid NVIDIA's H20 chips, especially for government or national security related work after the U.S. lifted its ban. Meanwhile, President Trump's meeting with Intel CEO Lip-Bu Tan appears to have gone well. Tan scoring more tops with members of Trump's cabinet. Katie, those shares taken off up 3.33%.
Yeah, what an interesting couple of days for Intel. We'll continue to follow that story, but it's still earnings season, and Circle reported its first earnings since it went public. Now, it lost money in the second quarter, mainly due to IPO-related charges, but reported a 53% jump in revenue. That's being rewarded with an 11% gain pre-market. Danny, this stock up more than 400% since it went public.
100%. Just a slight rally there. Katie, let's get back to one of our top stories and the data this morning, where underlying U.S. inflation accelerated in July to the strongest pace since the start of the year. Let's break down that data with Michael McKee, Bloomberg's international economics and policy correspondent. Mike, what did we get?
Well, we got a few surprises underneath the hood, but no surprise in, except for core year over year in the headline numbers, because as you mentioned, we got a 0.3% gain and not anything that's going to concern anybody on the headline. A lot of that was gasoline, the 0.2 gain there. Gasoline was down 2.2%. Core up 0.3%, but it was a strong 0.3. Services prices were up by 0.4, so it pushes the headline core to 3.1%. The Fed is going to be watching that certainly into September, and we'll see what we get when we get the August numbers for this. Goods and services both rising. Service prices kind of making people a little bit nervous. They were up, as I mentioned, 0.4%, and they're up by about 0.3, a little more than 0.3 for the year-over-year number. Goods prices rising again as well. You can see the little white lines there on the right side of the graph showing that goods prices are now rising. But the real question is what moved, and did tariffs have an effect? And they sort of did. You take a look at what was in the numbers. Airline fares were up 4% in total, and the gasoline prices I mentioned down 2.2%. But tomatoes, the president put a tariff on Mexican tomatoes, so tomatoes up 3.3%. Appliances last month were up big because of the tariffs on steel, but this time they're down 0.2%. We buy a lot of furniture from Asia. Furniture and other household furnishings up 0.7%. So we are seeing some tariff impacts. Katie, I know you're worried about coffee. 2.3% rise. Tariffs on Brazil.
There you go. There you have it. I am curious, Mike, when you parse the different sectors trying to find the impact of tariffs, how much is that pull forward effect sort of distorting things here? Because we saw that across industries at the start of this year. It's
starting to fade some because companies have now used up their inventories. So we're just on the cusp of what's going to happen. We're going to have to watch this for a few more months because, as I say, the inventories have been worn down now, and companies will have to pay whatever they're going to have to pay for replacements. And at the same time, we're just getting the tariffs imposed in many areas, and there are more to come. So the question is going to be, how fast do they come, the pharmaceuticals, the semiconductors, and everything else, and how fast did that show up in the data?
All right, a lot to look forward to. Then that is Bloomberg's Mike McKee breaking down that economic inflation data that we got at 8:30 a.m. Clearly, the market likes it. Futures really extending their rally after we saw those numbers hit. Let's talk about trade, though, because President Trump extended a pause of higher tariffs on Chinese goods for another 90 days, taking us into early November. Here to explain is Bloomberg's global trade editor, Brendan Murray. So 90 days pause from the U.S. China said in a similar statement that it would extend its own suspension as well. What's going to happen between now and early November?
Well, the two sides are going to continue talking and trying to maintain the stability that they've managed to achieve so far. We're going to see most likely a regular series of discussions, the way Scott Bessent has led the U.S. delegation in talks with his Chinese counterparts, most recently in Stockholm. So they've gotten to a place where they believe that things have stabilized and they can start making progress toward ultimately what President Trump wants is a big trade deal and a summit with President Xi. And we're many months from that, but where we've now got some sort of process set up to accomplish what the U.S. hopes to accomplish. Of course, China is playing a much stronger hand this time around than they played in Trump's first term, and they have control over critical minerals. And they most recently have indicated that they don't really need these U.S. Semiconductors that the Trump administration has signed off on the exports of. So it's a changed dynamic, but one that at least investors for the time being can breathe a bit of sigh of relief to say for the next 3 months at least, it looks like things are going to be kind of in some sort of ceasefire when it comes to tariffs.
To that point, Brendan, of China having a strong hand, prior trade deals that the U.S. reached with other nations, it was the U.S. that came in with a strong hand, and other countries basically bowing down to what America had asked of them. What does that mean about this timeline for China, and how long it will actually take to not just kick the can, but get a deal done if China does have that strong hand?
Well, it's just, I think it changes the dynamic, really. The President Trump tweeted just 36 hours ago or so about wouldn't it be great if China bought more soybeans? And, you know, these are kind of like 2019 things, and China is now has got a much more sophisticated and complicated negotiating tactic with President Trump, rather than just, you know, we'll buy some more soybeans and other agricultural goods to appease the White House. So these other countries, Japan, South Korea, and the European Union still don't have their executive orders, so they don't really have in writing what they've agreed to in a handshake so far. Those will still have to come, and as Mike McKee suggested, you know, these tariffs are still kind of rolling in, and they only really kicked in at a higher rate 5 days ago. So the dynamics and how they play out into the economy are really only getting started.
Brendan, thank you very much for your coverage this morning. That is Bloomberg's Brendan Murray. Now let's stay with China. Beijing is urging local companies to avoid using NVIDIA's H20 chips. The guidance is not an outright ban, rather a discouragement, particularly for government-related purposes. However, the information out with their own report this morning saying that China has demanded companies to halt NVIDIA chip orders over security concerns. You're seeing NVIDIA raise some of its gains pre-market on that report. Joining us for more is Bloomberg Tech co-host Ed Ludlow. Ed, we don't have this information match at the moment, but from what we do understand with how China is approaching NVIDIA and other high processors, just how big of a hit are they taking, even if the U.S. is allowing them to sell chips into China?
Well, there's an issue of chronology because, as Bloomberg reported, notices were sent by Chinese authorities in recent weeks, which would predate the news of 24 hours ago when the president confirmed he had reached a deal for revenue sharing 15% with NVIDIA for the H20 going to China. This is quite normal behavior across Chinese authorities and the internet watchdogs in particular to say to government entities and state-backed enterprises, do not use foreign technology if there is a security concern. The issue that the street's going to be looking at this morning is probably a little bit of rethink and remodeling on how the most bullish forecasts look of Nvidia starting to book revenue again from China. A lot of the analyst community look at this and then the 90-day extension and see it as a negotiating tactic from China, either because they want access to the higher performance chips that Nvidia is not allowed to send to China based on current US rules, or the opposite. They're trying to protect their domestic champions that are increasingly gaining ground in this space. Huawei has chips that are better than the H20. But I would note that, there has been a move lower since that information report. The initial pre-market spike was very much in line with CPI. So there's some noise there in the market.
So you can see NVIDIA shares pretty much unchanged now on the morning. Traders deciding what to do with these reports. Ed, I do want to move on and talk a little bit about Intel here. I think if you look at the 5-day chart of Intel, it's really amazing. You can see when exactly President Trump took aim at Louboutin, and you can see, of course, the reaction now that they seem to be back in good graces after Louboutin visited the White House yesterday. It really speaks to how much Intel needs to curry favor with this administration, how much they're relying basically on having a good relationship with President Trump.
Yeah, last Thursday on Truth Social, President Trump called for Louboutin to resign because of historic ties to China. Those ties, by the way, are well documented in the technology industry. It's been known about for a long time. And Intel's board of directors knew about them as well when they appointed him CEO. The thing is that on paper, what Intel wants to achieve as an American company that's trying to grow its manufacturing footprint in this country, it's highly analogous with the AI strategy of the administration. That is what they are focused on. Things that are tangible, can be invested in and built quickly. And, the reporting is that he will continue to meet with other cabinet members. Intel has just not been there in the race. They've not been put at that level that NVIDIA or even AMD have from how the president communicates to champion those companies in leading America's AI efforts.
Yeah, absolutely. That has been the narrative dogging Intel for well over a year now. Ed, I know you'll have much more on Bloomberg Tech. That is at 11 a.m. That is Bloomberg Tech co-host Ed Ludlow. Meanwhile, let's get back to these broader equity markets in reaction to that CPI data that we got at 8:30 this morning. Coming in as expected, Danny, and you can see how that is being greeted by the bulls right now. The S&P 500 higher by about 0.4%. Similar story when you take a look at the NASDAQ 100, and that two-year yield falling as people recalibrate their Fed bets.
It was definitely a bond market that was prepared for an uglier and a hotter number. So in line is good enough, perhaps going forward. The worry is that services inflation didn't come in as much as expected, and that's supposed to offset any goods inflation coming from tariffs. So one, maybe flying the ointment that might cap some of the rally from here.
Absolutely. But at least for right now, folks seem pretty happy. Better than feared, as you said.
Definitely. Well, coming up, we're going to talk earnings. Circle extending gains, even though it reported a loss in its first earnings since the IPO. We're going to have details for you next on Bloomberg Open Interest.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
in case you missed it on The Close.
With regards to the electric vehicle business, when we talk about the commitment to new models and more importantly, commitment to the infrastructure to support that, what's the plan?
We're starting to see different kinds of hybrids that customers are excited about. E-revs, which go about 100 miles, all electric, but then you could take a 700-mile trip once in a while. Those look really promising for a three-row crossover like Explorer. We're going very low end, super affordable EVs for urban duty cycles and for commercial. We're not going to invest in a lot of the very expensive crossovers for pure EV. We think that's going to be a hybrid business.
What does the supply chain look like specifically for the EV and hybrid business right now?
We've moved out our cycle plans. We've focused on affordable and commercial. We're fortunate we moved 3 or 4 years ago and we could tilt to hybrid and a specific kind of EV. And the supply chain has been able to move with us so far.
Don't miss The Close, live every weekday.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Let's get you some high interest stories. A look at what's making headlines around the world. Shares of Hanes brand, they are jumping in the pre-market, up 37.5%. A report that Gildan is closing in on a $5 billion deal to buy the underwear maker. The FT reporting that the deal may be agreed to by the end of the week. Negotiations, though, they are not yet final. Sinclair shares, those are also jumping this morning, up just under 19.5%. It launched a strategic review of its broadcast business. It announced that it's considering also a separation of its ventures unit. On Holding, that's also rallying this morning, up nearly 17%. It raised its full-year outlook. The Roger Federer-backed company reported better than expected earnings, had strong demand, and sees revenue growing more than 30% on a constant currency basis this financial year. Katie, I should admit my bias. I have 2 pairs of On Holding, so yeah, you're welcome, On.
They're hot. They're trendy. I'm more of a hookah gal, but we can get into that.
House divided.
There you go. We'll get into that in the commercial break. Let's talk a little bit about Circle shares. They're surging despite posting a one-time quarterly loss. Traders optimistic after revenue jumped more than 50% in its first earnings report since it went public. Remember, it IPO'd at $31 a share on June 4th. That certainly feels like a long time ago. Bloomberg's Bailey Lipschutz joins us now. So, okay, they had that one-time loss. It was revenue rising 53% that has traders psyched this morning.
That and the fact that there's still that scarcity value. This is still one of the better performing new companies, up about 6x from where it priced at its IPO. Katie, and beating expectations really kind of on the top and bottom line. The big question, though, is the fundamentals of the business. And we were talking about that. This is a company that benefits from shorter dated treasuries. That's where they're holding their cash. And is basically, if we do see 3 rate cuts, as investors are increasingly betting on, that could dent kind of their outlook. But the big question is, what does that mean for crypto?
I think it's fascinating, and this is really where TradFi and whatever this is really intersect. The fact that it does hold a ton of those short-term bills, as you say. So if that's the case, you get these earnings on the same day that you get CPI that people are looking to as really cementing in the idea that we're going to get a September rate cut, really not affecting the stock at all, up 14%.
No, not at all. And the one thing that we did talk to a few analysts about before earnings was this debate. If we do see the Fed cut 3 times, what does that mean for a company like Circle? And if you want to take the bullish view on the entire crypto space, well, maybe there's more leverage. Maybe there's more demand for crypto assets. Maybe there's more demand for DeFi assets, and that could actually benefit Circle. But again, that is kind of bulls talking their book to an extent.
And should say the Circle CEO is going to be on BTech at 11:30, so one to watch out for. Bailey, another hot IPO that we're going to get the earnings for is CoreWeave. How high is the bar after we heard from all the hyperscalers and the amount of spending they're doing on AI?
I think it's quite high. This is a stock that's up about 250%. We are seeing it under a bit of pressure this morning, so this is going to be a closely watched report. The big question, especially with some of these newer companies in these hot spaces like AI and computing, is what does management say on the earnings call? How do they address some of the tougher questions? Because this is a stock that's hotly debated, not only by the buy side, but by the sell side. 16 holds, 5 buys, and 3 sells. Average price target implies a 16% sell-off. So there's a lot of debate around if this company deserves its current multiple and where it's trading at. And one thing to also keep an eye on, as analysts have called out, lockup is expiring later this week. So that's going to open up about 80% of shares available for trading. That's going to be key.
Yeah, that's interesting that we're getting this report on a Tuesday afternoon. As you mentioned, the lockup expires on Thursday. How does that usually go? What does it usually look like when we see that lockup ending?
It can get choppy. The big thing with a number of these companies, this is a hedge fund hotel, if you will, as some of the skeptics put when they were going public. The big thing is a lot of the long-term investors, as bankers and investors will say, need to play fair. You don't want to see a rush to the exits. That only hurts each other. So the big thing is going to be, do we see some slow selling? What does that actually look like? We will likely see some filings on Friday if we are seeing investors going towards the exit. So it can increase volatility. But again, you have a hot stock in a hot area with a lockup expiring.
Maybe
Fireworks.
take some profit?
Exactly.
I was going to say, they're sitting on some pretty paper profits, so maybe they want to make that real. Bailey, thank you so much for joining us. That is Bailey Lipschultz. Coming up on the show, Nuveen's Chief Investment Officer, Sarah Malik, on the CPI print and potential frothiness in markets. Stay with us for that conversation. This is Bloomberg Open Interest.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller at the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
The bulls will say there is further room to go in terms of positioning. However, there is also some substance to embolden the bear narrative, and in particular the fact that the average FMS cash level remains at a low 3.9%, which historically has been a strong signal to say that global risk assets are toppy, as now is a good time to retreat or hedge your position.
That was Bank of America's Elias Gallo following their survey showing that a record number of investors see stocks as overvalued. Nuveen's CIO and head of equities and fixed income, Sarah Malik, joins us now to discuss. And Sarah, I would love to hear you weigh in on this debate because, yes, okay, U.S. stocks look expensive, but then you compare that to what we're seeing in the economy, what we're seeing in underlying corporate America right now, and there's a real debate to be had.
What you think of U.S. stocks depends on two factors, and that's technology and also earnings growth. So let's start with the latter. Earnings growth is very strong for the second quarter. We came into this quarter expecting almost 5% earnings growth from consensus. We're going to end the quarter at about over 10% earnings growth year over year. That's positive for the U.S. economy. And secondarily, it's been led by technology stocks and that continued investment in artificial intelligence. And if you're bullish on tech and their earnings growth, tech earnings has accounted for almost 2/3 of earnings in the recent history. We are bullish on technology and the continued spending in artificial intelligence. So I think that is supportive for a stock market, which I agree is trading at a worrying premium.
Sarah, there has long been this expectation that tech dominance and especially advancements in AI would at some point mean a broadening out of the rally as other companies adopt tech. When and if ever does that play out?
We've certainly not seen the broadening of the rally to small caps or even cyclicals at this point. And I agree, you would expect to see that start to play out given the strength of the economy. But as I said, earnings have really been driven by tech stocks. So we've not seen the earnings growth to support these companies. And with the economy showing some signs of slowing, with employment missing numbers last month, that again bodes well for technology stocks, which have their own structural growth drivers. So that is a challenge where you're seeing this continued imbalance where technology is leading the way and just about everything else is getting left behind.
Well, I think it's the 5th time that I've mentioned this stat from Goldman, but I think it really encapsulates what we're seeing and what you're saying, that you think about the second quarter, you had the Magnificent Seven grow their earnings by 26%. That number was just 4% for the rest of the S&P 500. Sarah, what is it going to take to finally see earnings broaden out in a consistent way? Is it rate cuts? Is it something else?
Aggressive rate cuts. Now, given the CPI number today, odds are on the table for a rate cut in September, but whether we get 25 or 50 basis points, the question after that will be, where do we go from here? So are we going to get aggressive rate cuts that stimulate this economy even further from a manufacturing and cyclical point of view? I think that's unclear. Now, the good news for cyclicals, though, is manufacturing is coming back to the United States. One positive call we've had outside of tech is infrastructure. Not only is that a play on a resumption of more manufacturing in the U.S., but it's also a derivative tech play with AI data centers and the need for building those in the U.S. So you can find areas outside of tech that sort of are on both sides, a play on a stronger economy and also a play on artificial intelligence, and that's infrastructure.
Sarah, literally just a minute here, but for those who have said that this market is too concentrated, that it's starting to look like a bubble, what would you say to that?
Well, I've been in the industry for 30 years, and technology has made this market look concentrated for almost a decade now. So I would be careful of just trading in and out of the markets based on valuation, because that can be very painful. I was a small cap growth portfolio manager in the late 90s, so I lived through that period where markets and tech looked expensive. What they have going this time that they didn't have in the late 90s is that earnings growth. In the late 90s, we had a lot of companies out there that were public, that were unprofitable. If you look at the tech leaders today, that's Microsoft, NVIDIA, Broadcom. These companies have very strong sales and earnings growth. And so I think that is what is different this time around.
It's an important point. We're talking about big, mature companies, Sarah. We're just getting started. You're sticking with us through the opening bell, which is up next. Don't go anywhere. This is Open Interest, and you can see it's setting up to be a green open. This is Bloomberg.
there is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in.
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were gonna probably just hit it. And so far we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is gonna get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
All right, we are moments away from the official start of the cash trade on this Tuesday morning. Welcome back to Bloomberg Open Interest. I'm Katie Greifeld. We have green on the screen behind me. An interesting setup, too, after we got those inflation figures at 8:30 a.m. for the month of July, coming in line with estimates, maybe a hair higher when it comes to annualized core, but no one seems to be worried about that at this moment. The S&P 500 rising in the pre-market. It's actually the small caps that are outperforming today as you see those treasury yields come down, especially at the front end. Traders saying that September looks like a lot for a Fed rate cut. You can see the bells ringing behind me as we officially welcome in the start of trade today. And there are some things to keep an eye on under the surface. One of them is China telling companies to avoid NVIDIA's H20 chips, especially for government or national security related work. That's after the U.S. lifted its ban. Meanwhile, you have President Trump's meeting with Intel CEO Lip-Bu Tan appearing to have gone well, with Tan scoring talks with more members of Trump's cabinet. And you can see that those shares are rising right now. NVIDIA maybe a little bit less.
I was going to say, I've got to look for you, Katie, on those. Maybe the reason NVIDIA is rising less, indeed it was in the red in the pre-market, was the fact that we had this report from the information that China was outright asking companies to stop importing them. You mentioned Intel up 2%. Katie, let's also get a look at Circle this morning because it reported its first earnings since going public. It lost money in the second quarter. That was mainly due to IPO-related charges, but it reported a 53% jump in revenue. And Katie, those shares are up nearly, just under, I should say, 14%.
And we're back now with Nuveen's CIO and head of equities and fixed income, Sarah Malik. So really interesting setup here. Sarah, I want to go back to that trade discussion because you do have China and the U.S. extending that 90-day pause. At the same time, you do have those issues percolating under the surface when it comes to NVIDIA's chips in particular. We think about the discussions of trade talks across the world, it feels like, but how important specifically is that U.S.-China relationship and making sure that it stays open?
U.S.-China relationship is crucial, I think, in terms of trade talks, and that, I think, has always been one of the main areas of focus for this administration. Part of this NVIDIA is negotiations that will be ongoing. I think a bit of relief for the markets that we get a 90-day delay here. But overall, what we see in terms of tariffs is up to about 15% tariffs across the board outside of the U.S. And if you calculate those numbers in terms of how they affect GDP and inflation, they should be a drag of on GDP of about 1.5% or so, and a bump to inflation perhaps of 1% over time. Of course, we are not seeing that show up dramatically in the inflation numbers yet, that would get you quite close to a recession. So it'll be interesting to see how this plays out over time with the impact of tariffs.
To your point, Sarah, they're not showing up in the inflation numbers yet. It's worth just taking stock of where we are in the market because some of the gains in treasuries have petered out. Indeed, only the 2-year yield is gaining, but now less than 2 basis points. Sarah, part of the data we got this morning was services inflation that continued to look hotter than expected. It was supposed to be services coming down to offset some of the core goods inflation rather. Does that give you pause if other elements, non-tariff related elements, look more stubborn?
Short-term good news for the markets is investors expected CPI to come in today hotter than expected. So that's the positive and why markets are looking to open up. Now, the shift, exactly as you pointed out, from goods to services is the issue. In the past, we saw some pickup in goods inflation last month with toys stronger than expected, sporting goods being strong. Services had not seen a pickup in inflation. Now, today, of course, what we see is that inflation creeping over and spilling over from goods into services. And that is an issue for the consumer in terms of, is the consumer now starting to make tougher choices because of the impact of tariffs? We'll see how that plays out from here. Of course, as you noted earlier on holdings, it's not spilling over to athletic shoes at this point because that number was very strong from them. But I think consumers are making tougher choices when it comes to experiences, how much they're going to pay for airfares and hotel rates going forward.
Absolutely. I mean, that seems to be the anecdotal evidence that's out there. Not seeing it in the numbers yet, but that could change in the months to come. Let's talk a little bit more explicitly about what's going on in the bond market, because you see a reaction to these numbers. The 2-year yield down about 2 basis points or so. You take a look at what the 10-year yield is doing. It's been percolating in a really interesting range over the past few weeks. It had felt like we were glued to 4.5%. That seems to have reset a little bit lower. Now we're hanging out between 420 and 430 on your benchmark. Where do you think we go over the course of 2025?
10-year yields likely remain about range bound. We've come a long way from where we were when we saw the spikes during Liberation Day 1.0. But bond markets have been calmer about inflation and the outlook for the U.S. economy going forward. We see an incremental slowing for the economy. We started to see that with payrolls last month, which came in at 73,000. And the Fed rate cut for September, whether we get 0, 25, or 50, we're in the camp of 25 with upside to maybe a 50 basis point rate cut. That would depend on how do non-farm payrolls look for August. Do they come in again sub 100,000, and are they disappointing? How does the next CPI number look? The Fed has stated that they would look at inflation related to tariffs as a one-time bump. So I think that's what the bond market is counting on. Now, looking within fixed income, there is an area that we like, which is preferred securities. And you're talking about what do we like outside of technology? Preferred securities and fixed income are backed by the strong fundamentals of U.S. banks, which are in good shape. So areas like preferred securities and also municipal bonds, where fundamentals are also strong, are attractive areas within that segment.
Sarah, even though there's attractiveness in bonds, to your point, we saw a whole host of weak auctions across the curve last week. How much of that is due just to lower yields, less attractive following the payrolls report, versus some really serious challenges for the bond market around things like Fed independence and a growing deficit?
Those are issues that have been bubbling up. The growing deficit has been something that investors have been thinking about for quite a while. High interest rates, of course, even more problematic for the deficit. So I see that as a structural medium-term to longer-term issue that the U.S. needs to think about and how to deal with it. In terms of looking at the Fed independence, there's been some volatility around that for equities as well as for bonds. I think the Fed will stay independent, and we'll soon find out what's going on with the next Fed chair nomination. So those are issues for the bond market. But I think generally U.S. safe haven status remains intact now that we've gotten our arms around what's going on with tariffs, and the economy is slowly decelerating, but not at a rate where a recession is imminent. Those are all positives for the bond market, and why we've seen Treasury yields move to a more stable base versus what we saw in April.
Well, to your point on figuring out who the next Fed chair is, it just feels like that potential list continues to get longer. We heard from Jim Bullard on CNBC this morning saying that I'll accept Fed chair job if we accept Fed independence. So a lot of question marks there. But Sarah, before we let you go, I do want to ask, what is your preferred haven in this market? We're talking about the bond market. It feels like treasuries in particular have been a bit of an unreliable hedge. I don't know if gold near record highs is trading as that hedge, or whether you see somewhere else as your preferred form of protection here.
I like areas which have their own structural growth drivers that can remain resilient in any kind of environment, including a recession. So I talked about infrastructure earlier. Infrastructure not only has the positive of manufacturing coming back home, but the components of infrastructure tend to be utilities and waste management. We still turn on our lights and take out our garbage during a recession, so it tends to be more resilient, and it has that growth upside from artificial intelligence and data center growth. Second area we like is an income providing area within equities, dividend growers. These companies tend to increase their dividend over time, so they have very strong cash flows and balance sheets. Again, more resilient on the downside, but also able historically to capture much of the upside of markets.
All right, Sarah, great to spend some time with you this morning. That is Sarah Malik of Nuveen. Meanwhile, let's get a check on the stock market right now. You're just about 8 minutes into the Tuesday trade, and you can see we have some pretty good breadth on this rally. The S&P 500 higher by about 0.6%. You have more than 400 names in the green right now, and you can see it's Meta, Microsoft leading the way higher. Apple and Alphabet, Amazon also putting up a fight as well. That is leading to some pretty sizable gains when it comes to your benchmark following CPI. But on the downside, this is what you need to keep an eye on. Cardinal Health is up there at the top, reporting pretty poor earnings, or at least not being received well by the market. Nvidia, you can see trading places here. It's switching around, but Nvidia erasing its gains. We did have the information report that China told companies to halt their orders of Nvidia's chips. That seems to be affecting Nvidia's sentiment. But let's take a look at the sector level, because as of right now, you have a perfect score, 11 out of 11 in the green. Communication services and financials up top. Your relative underperformers today, energy, consumer staples, and utilities. But Danny, overall, this is a very risk-on market.
It is, despite the fact that bond yields have given up some of their gains, or rather we're looking at a long end that's now pushing higher and only a front end that's coming lower. It is the continued optimism of the equity market versus pessimism of the bond market. Speaking of some of that pessimism, you mentioned it, Katie. Coming up, we're going to discuss China urging companies to avoid NVIDIA's H20 processors. How much does that complicate Trump's AI chip deal? We're going to have more on that story coming up next on Bloomberg Open Interest.
Bloomberg launches our inaugural 25 African startups to watch list.
About 2.5 years ago, we created a solution. We are able to generate refrigeration using the sun and water. We're able to store energy in the form of ice, as opposed to storing energy in the form of lithium batteries. We're integrated in every refrigerator a pay-as-you-go technology, allowing individuals and small businesses to be able to pay as low as $10 to own a refrigerator.
Uncover is a women's wellness brand that is specifically made for women of color. It's based in Africa, which is the most underserved beauty market in the world. We are making Africa a priority and not an afterthought. We believe that the population on this continent deserves to be formulated for, heard, and we are giving this consumer a voice.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
Yes, let me ask
Interesting questions.
Bloomberg Television. Top experts, great questions.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Welcome back to Open Interest. A quick check on this rally extending right now. The S&P 500 higher by about 0.7%. There's a lot going on with tech, with the chips, which we'll talk about in just a moment. You can see the Nasdaq 100 also rising by about 0.7%. It's the small caps that are stealing the show right now. The Russell 2000 outperforming. It does help that you have yields declining a bit in the wake of CPI, but as Danny pointed out, those gains are starting to dissipate a little bit in the bond market, so we'll see if small caps can hold on to this win. But it's time now for our top calls. Some of the analysts' action in focus this morning, and first up, Baird upgrading Starbucks to outperform, expecting that new leadership will effectively drive its turnaround strategy. Starbucks shares up about 2.5%. Next up, you have Piper Sandler upgrading Chipotle to overweight, seeing limited downside after falling 25% over the past month alone. And finally, you have Argus downgrading Union Pacific to hold. The analysts anticipating export challenges due to tariffs. Shares pretty much unchanged, maybe a little bit higher, Danny.
Well, speaking of tariffs and trade, Katie, back to one of our top stories this morning, and it is around tech, with China urging local companies to avoid using NVIDIA's H20 chips. Now, that guidance, it is not a ban, but a discouragement, particularly for government-related purposes. Joining us now is Bloomberg Tech co-host Caroline Hyde. And Caroline, it seems the information adding to some reporting here, but what do we understand about the current state of China and allowing their companies to order these chips?
Well, exactly the risk that Jensen Huang, the CEO of NVIDIA, has been trying to tell the market time and time again, trying to tell the government time and time again, if you limit our ability to sell our high-performance chips into China, and indeed if you curtail the performance of the chips, of course they've asked them again and again to make them less and less useful and powerful, so that's why you've got the H20, which Trump himself calls obsolete. If you do that, you will spark innovation in China, and they will outcompete us. They will start to lean in on Huawei's Ascend Accelerator program. You will start to see the ByteDances and some of the other key giants, the Tencents, the Alibabas, go to local domestic production rather than NVIDIA and AMD. And here we have it. We are reporting that already we look like the government is leaning on these big tech giants to try and perhaps pull back from their dependency, particularly around government-related use cases. But the information is also going a step further, saying it's not just leaning and saying and nudging, it's actually demanding that these big tech giants don't buy the H20. This is, of course, exactly what had been perhaps thought through by some of the leaders and chip makers here in the U.S.
Well, you touch on what I've been wondering about, because we've been talking about the U.S. government's perspective, we've been talking about China's perspective, but this must be enormously frustrating for CEO Jensen Huang. I mean, you think just about the money that he's losing by not having access to the Chinese market, but then that existential fear that you bring up that maybe they're going to get left behind, that you're going to see some of their Chinese competitors really step up their game.
And look, this is the paradox, and probably one that the U.S. government, of course, had thought through. If we keep making these CEOs, Lisa Su and Jensen Huang, play a game of ping pong instead of focusing in on innovation and in sales, when probably you're going to spark an issue here. And of course, that's exactly what's happened. They are losing a ton of money. Now, we understand, of course, Bloomberg estimates about $7 billion worth of H20 chips go from NVIDIA per quarter to China. And of course, that's a nice little earner if you're able to make 15% cut on that. But in so doing, you're hearing that the Chinese pushback is there, that they don't want $7 billion worth. And in fact, they want every company to be trying to avoid these sorts of business deals with US giants. They don't want it in their overall tech stack. And also, there have been some fears they've been articulating. They worry about security, efficiency. And meanwhile, all of this has been going on. Huawei has been busy trying to innovate, getting money from the Chinese government, a special tech fund there is a lot of concentration going on China to try and outcompete. And here lies the paradox. Yes, you try and curtail, you're going to have an issue.
One of the interesting things, though, is Jensen Huang had made a concerted effort to appeal to the Chinese. On Trump's inauguration, he wasn't at the White House, he was in China. So we see this effort from tech CEOs to try to play politics.
Yeah.
Karen, we have to talk about what happened with Lip-Bu Tan of the Intel CEO yesterday. It seems that Trump has had a bit of a 180 after meeting with the Intel executive.
And that's always what everyone prepares themselves with President Trump. And indeed, Lip-Bu Tan has done what was necessary in terms of actually deciding to go to the White House, and what he declared would be trying to restate misinformation in the market about his relationship with Cadence, where he used to be the CEO, and what had been done with Chinese institutions, and indeed some of his own investments that he's made with his venture firm into Chinese stars in the chip sector. SMIC, he was actually on the board of that company. All of this was known, but it suddenly sparked worry amongst lawmakers and again from the administration itself, where they called for his own ouster, for him to remove himself. He's managed to persuade President Trump with some warm tones coming from President Trump, saying what a success story he's had as someone who has come as an immigrant from Malaysia, built himself as a US citizen, and managed to become the CEO of an incredibly integral company. Now he has to go back next week, talk with cabinet members, we understand, for President Trump. What then of the innovation that's going to happen here in the United States thanks to Intel? What then of manufacturing? What then of some of the access to $8.5 billion of the CHIPS Act money?
Looking forward to see how those conversations shape up. Of course, Intel, an American icon, but definitely feels like it's been on the decline. That is Bloomberg Tech co-host Caroline Hyde. Now, we do have some breaking news. That is President Trump saying that he is considering suing Fed Chair Jerome Powell over his handling of reconstruction of the Federal Reserve's buildings. Michael McKee, he is Bloomberg's international economics and policy correspondent. He joins us now. Specifically, Mike, he says that he is considering allowing a major lawsuit against Powell to proceed because of the horrible and grossly incompetent job he has done in managing the construction of those buildings. What do we know so far?
We don't know anything. This seems to be another effort by the president to flood the zone, as they say, just come up with all kinds of distractions to keep people not thinking about some of the other things they don't like about his administration. There wouldn't seem to be any way to sue Jay Powell for this. First of all, you'd have to have somebody who could have standing. In other words, somebody who could claim they were harmed by whatever the Fed chairman did or did not do. And then it would have to be proven that Jay Powell did something wrong. The fact that a building is over budget, I think any of us who have had home repairs done know about things going over budget when you're doing construction. So I don't think there's really going to be any lawsuit. Remember that his whole MO is I'm threatened to sue or sue people, and he loses almost all those cases, but settles them or something. It's just what he does to try to intimidate people. I find this tweet interesting, though, because not only is he insulting Jay Powell by going back to the too late thing, he's now insulting Steve Mnuchin, his Treasury Secretary, in his first term, calling him Mnuchin, something like that. I don't know how he pronounces it, and I don't know what that's supposed to mean.
I think that might be an attempt at a phonetic spelling at Mnuchin. That is literally my only guess. But to your point, Mike, he's criticizing his former Treasury Secretary for picking Powell. It seems like his current Treasury Secretary right now is leading the search for who will replace Powell. How is that search shaping up? And I mean, you got to look at this, Mike, and say, is he maybe taking a second thought about letting someone else lead the search for who becomes the next Fed chair?
No, I think this is very typical Trump. It's not my fault. I didn't have anything to do with this Fed chair. It's Steve Mnuchin's fault. Now, the interesting thing is 2 years from now, whoever is Fed chair, we'll see if he likes that Fed chair or if he blames Scott Bessent. And what nickname will he give Scott Bessent?
I think it's Scotty B, right?
Well, now because he likes it.
Right. If it turns negative, Scotty F,
if it
maybe.
turns negative.
I don't know.
I mean, the bottom line is he says Powell needs to lower the rate now. Obviously, the Fed chair can't lower the rate by himself, and there's no Fed meeting until September 17th. So it's in that sense, it's kind of meaningless.
Fair enough. All right, Mike, thanks for keeping us up to date on that. That is Bloomberg's Michael McKee. For what it's worth, 30-year yields at highs of the session up just over 3 basis points. You are watching Bloomberg Open Interest.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Welcome back to Open Interest. Let's take a check at this market right now. The S&P 500 still higher, but gains actually coming in a little bit after we heard from President Trump that he's considering allowing a major lawsuit against Fed Chair Jerome Powell. The Nasdaq 100 also coming in up about 0.3%. It's still the Russell 2000 that is leading the way. We'll have to see how that develops. Let's take a look at some of the individual gainers right now. You do have some good news in the form of Meta. You have Circle higher as well. They reported earnings. Those were well received. Nvidia has been sort of treading water here. It's now a little bit lower. Of course, it is firmly in the crosshairs of U.S. and China trade negotiations. Hims & Hers Health down about 4%, and then Celanese Corp down 21%, Danny.
Some other movers that we are watching this morning, Katie, worth pointing out pot stocks, if we can get a look at those, because why not? Trump saying yesterday that he might consider reclassifying marijuana, putting it at a lower schedule. You can see Tilray there up 13%. This market acting like the federal government's going to legalize it should, again, just worth note, it will still be illegal. It will just be at a lower classification of illegal.
Just like a little bit less illegal. What
right.
I find interesting is that, I mean, people have been getting behind pot stocks for a while now. There's been a lot of false dawns here when it comes to how they'll be treated legally. But if you take a look at where the money is going, an ETF that I like to watch, ticker MSOS, this is the Advisor Shares Pure U.S. Cannabis ETF, not really seeing a ton of inflows. It took in almost $20 million yesterday, but in ETF land, that's pretty much a drop in the bucket. So investors, still a lot of skepticism here, I think it's safe to say.
Does that just speak to who's investing in these pot stocks? If the individuals are going up, is that basically just like the online Wall Street bets are betting and maybe more measured ETF people aren't?
I don't think a lot of institutions are putting big money into
probably
the
right.
marijuana.
I don't think they're allowed to, a lot of them.
But if you are, let us know. In any case, coming up in the next hour, great lineup. Rebecca Patterson joins us to talk CPI and U.S.-China trade relations. Then Marsh McLennan CEO John Doyle joins as well, and Claudia Sahm. This is Open Interest.
Break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is As more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. It is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. Despite worries over President Trump's tariffs, consumer prices rose at less than expected 2.7% annually in July. Business analyst Jill Schlesinger.
There was, in addition to energy prices being down, there was some improvement in the cost of shelter, which is up by 3.7% from a year ago. That's down significantly from the peak that we saw a couple of years ago, and a slight improvement from the June reading.
Furniture prices, the cost of tires and pet products all up. So is the Dow. It's ahead 233 in early trading. A Justice Department spokesperson tells CBS News Attorney General Pam Bondi is expected to meet with Washington, D.C. Mayor Muriel Bowser a day after President Trump took control of the local police force. He says he'll send in National Guard troops, too. Correspondent Scott McFarland.
The president has also threatened to expand his crackdown on crime in other U.S. cities. He named Chicago, Baltimore, Los Angeles, New York, and Oakland, but the president doesn't have the same authorities in those cities that he has in D.C. The Democratic mayors and governors in those communities are already pushing back hard on that idea.
We're expecting an update this hour on last week's deadly shooting at CDC headquarters in Atlanta. One police officer was killed by a suspect who professed anti-vaccine views. Now, some agency employees are calling for beefed-up security, including this one, whose voice was disguised to protect their identity.
There has been constant rhetoric that has vilified CDC. He's called CDC a cesspool. He has, quite frankly, dehumanized all of us who work at CDC.
The Uvalde, Texas school district has released records from the deadly school shooting there in 2022 after news organizations, including CBS, sued the district. Correspondent Matt Piper.
The records include emails between top school district officials and also text messages and emails to and from at least 2 school police officers who were on the scene. There's also the personnel file of the former Uvalde Schools Police Chief Pete Arredondo, including texts of his. At 11:40 a.m. that day, a text to him from a district secretary noted someone reported hearing shots outside Robb Elementary. Nearly 400 officers waited more than 70 minutes before confronting the gunman.
The Kodak moment may go away forever.
Don't miss the moment. Keep your camera ready with new Kodak Gold Plus film.
Eastman Kodak's warned investors it could be forced out of business as it uses up the last of the money from a pension plan to pay down debt and stay afloat. George Eastman launched the company in 1888. It produced the first successful roll film hand camera in the world. This is CBS News. couple of musicians have resolved their messy split.
A court filing indicates the estranged pop duo Hall & Oates reached a private ending after details of the rift between them went public in court documents after Daryl Hall sued John Oates over a business partnership in 2023. It's not clear when the arbitration ruling was reached or what the outcome was. There's been no comment from attorneys on either side. Hall had accused Oates of blindsiding and betraying him, saying their relationship and his trust in Oates have deteriorated. Oates said he was deeply hurt that Hall was making inflammatory, outlandish, and inaccurate statements about him. Steve Kathan, CBS News.
Police in Spain say rescuers have found the body of an American hiker who'd been missing in the Pyrenees for almost a month. They say Cole Henderson's remains were found more than 650 feet down the north face of Monte Perdido. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube as well, so head over to youtube.com, search Bloomberg Live Radio, and that's where you'll find us. Norma Linda, Paul Sweeney here with you in New York. Coming up, we're going to check in with Ed Ludlow, Bloomberg Technology co-host, talking about the story coming out of China urging firms not to use NVIDIA's H20 chips. This story just never seems to be ending here. Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist. He'll give us his thoughts on this inflation print this morning. The CPI print generally in line with expectations, maybe a tid higher on the annualized basis. Maybe we'll see how that looks. Priya Misra, she's going to join us as well, fixed income portfolio manager at JP Morgan Asset Management, get her thoughts on the fixed income market. Then we're going to talk weed. When you want to talk cannabis, you talk to Ken Shea, Bloomberg Intelligence Senior Consumer Products Analyst. I think President Trump has some thoughts on the cannabis market in general, and we'll get down to that. But right now, let's kick everything off with Lisa Mateo and a Bloomberg Business Flash. Lisa.
You got it. In this Bloomberg Business Flash brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. You can learn more at ibkr.com/around-the-clock. We've got stocks advancing this morning. This after core CPI picks up to the fastest pace since January on an increase in service prices. Core CPI, it increased 0.3% from June on an annual basis, picked up to 3.1%. You have Ellen Zentner and Morgan Stanley Wealth Management, who said in the short-term markets, well, they'll likely embrace these numbers because they should allow the Fed to focus on labor market weakness, keep a September rate cut on the table. But in the longer term, Zentner said because of tariffs, well, we likely haven't seen the end of rising prices. The Nasdaq up 0.2%, but look at the Dow up 0.9%, 393 points. The S&P 500 up 0.4%, 29 points. The two-year yield 3.74%. That's down 2 basis points. The yield on the 10-year 4.30%, and that's up 1 basis point. The Bloomberg Dollar Spot Index, that's down 0.2%. Shares of Intel, they're higher. They're up 2%. CEO Lip Bhutan met with President Trump at the White House, and this is after calling for his resignation. The president now calls Tan's success, quote, amazing, said discussions will continue. And finally, shares of NVIDIA, they're down about 0.6%. Sources saying China urging companies to avoid using NVIDIA's H20 chips. Sources saying it also affects AI accelerators from AMD. It comes as both companies, they just agreed to pay 15% of their China AI chip revenues to the U.S. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Nora and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. Norma Linda's sitting in today. Nora, the market likes what it saw, it seems like, on the inflation rate. It's a little bit higher, but I think that there are fears where it could have been even higher, but now a little tepid, so maybe the Fed can cut.
Absolutely. And I think that we're seeing that really reflected in the trade, in the bond market, people really reassessing what the rate cut expectations are. Really, a lot of people pointing towards September here.
Yep. Got the two-year Treasury yield in about 3 basis points, 3.73%. All right, let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Norma Linda. We're joined by Bloomberg's Natalia Kenyajevic. Natalia, what are you looking at today?
Let's start with Circle Internet, guys. The ticker is CRCL. The stock is up by 6%. We spoke about preview yesterday, so the company delivered. We saw that results were positive. Adjusted EBITDA came at 126 million. Expectations were for 121. There was also beat in total revenue, which gained 53% on a year-over-year basis. Analysts, of course, highlighted its company's stablecoin USDC. So the circulation outlook was very ambitious, and the company said that there was 61.3 billion USDCs in circulation at the end of this quarter. This is a 90% year-over-year increase. So we do see that demand for stable coins is growing. Still, the company posted a net loss of more than $400 million, and shares rose to $170. The IPO price, as a reminder, was at $31.
Wow, just an amazing rip there for that name. Tilray Brands.
Right, so this is a cannabis story. We do see that Tilray Brands shares, the ticker is TLRY, so shares are up by almost 19%. So this company, as well as other cannabis-linked stocks, are moving higher. We saw that President Donald Trump said that he was considering reclassifying marijuana as a less dangerous drug. So Trump said that he may announce a change in the next few weeks. So right now, cannabis is labeled as a Schedule I drug, basically in the same category as heroin or LSD. Analysts are saying so this potential reclassification could lift the entire market and, of course, help those companies with better access to capital.
Definitely. I mean, looking at shares of Tilray Brands down 25% this year. So it'll be interesting to see whether or not these developments really create a lift for this company and others in the sector here. You're also looking at Venture Global.
Yeah, so this is the energy story, and this is also another IPO story. So the company posted earnings. So on the one hand, shares are up by 2.7%. The ticker is VG. So the company posted higher profit, revenue more than doubled. So revenue rose to $3.1 billion from $1.1 billion. And the company also, of course, saw an increased profit driven by higher LNG sales volumes at one of its facilities. However, keep in mind that the company went public in early 2025, and there was lots of concerns about company's fundamentals, and the stock is still down by more than 50% since its IPO.
Wow. Yeah, went public January in 2025 is $25 a share. Here we are at $12.70. So come down there. But I don't know. I like the LNG business. There's always demand for gas out there.
Yeah, there's no sells here on the stock. I mean, if you're looking, there's about 8 buys and 8 holds here, 0 sells. So it seems that people feel similarly.
All right, Natalia, thanks so much for joining us there. Natalia Kenyajevic, she covers all the equities for Bloomberg News. And for more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you get your podcasts. All right, I have to be honest with you. I'm having a hard time keeping up with this whole China, NVIDIA, AMD.
Tell me about it.
The 15% tariffs. Can the chips, are they welcome in China? Are they not? Can they sell them in China? Let's go to Ed Ludlow. He's on top of this stuff. Ed Ludlow, Bloomberg Technology co-host. He's over in London right now. Hey, Ed, what's the latest here? China is, I guess they're urging firms not to use NVIDIA's H20 chip. I thought things were kind of thawing out there.
Yeah, this is fast moving. This is, the only appropriate time of the phrase market whipsaw that I've been able to use to date in this context. The information has reported that China's internet regulator has ordered specific technology companies, Alibaba, Tencent among them, to stop placing orders of NVIDIA's H20. The H20 is the China-specific chip that had performance engineered out of it that was subject to export control. What we knew, by the way, as of Monday morning, was that NVIDIA had not in any recent months shipped any H20s to China anyway. But the problem with this latest report, which has been in the last hour or so, is that it's a much more extreme move by China than what Bloomberg had reported overnight, which was basically an advisory Chinese authorities had strongly recommended to various Chinese technology companies not to use the H20 in particular, as well as one chip from AMD. But the market's reacting. That's all that matters, right?